The major markets closed mixed last week, with minimal gains and losses in all but the Emerging Market Index. The MSCI Emerging Market Index added 1.72%, recovering some of the prior week's losses. The bland returns were largely the result of some uninspiring economic reports. The week began with the release of the Empire State Manufacturing Index, which missed expectations and fell from the prior month's reading, yet still remained within the top 10 monthly readings in the last 5 years. This was followed up by the NAHB Home Builders Index, which held at 83. The reading sits near the all-time highs, hovering steady around the mid-80 level after hitting a peak in November of last year. The housing data continued Tuesday with the release of building permits and housing starts, which both fell slightly short of expectations, but still stood near the 10-year record highs. Wednesday saw the release of the FOMC minutes from April. There was no significant change found within the notes, as the Fed committed to the stimulus policies, as well as their transparency of intentions, saying that it would likely be some time until the economy had made substantial further progress towards the committee's maximum employment and price stability goals relative to the conditions prevailing in December 2020, when the committee first provided its guidance for asset purchases. Many participants highlighted the importance of the committee clearly communicating its assessment of progress towards its longer-run goals well in advance of the time when it would be judged substantial enough to warrant a change in the pace of asset purchases. Yet the committee did hint to the eventual tightening, saying, "A number of participants suggested that if the economy continued to make rapid progress towards the committee's goal, it might be appropriate at some point in upcoming meetings to begin discussing a plan for adjusting the pace of asset purchases." The week concluded with mixed results in the jobless claims data and existing home sales. In the end, the S&P 500 managed to cut the losses for the week due to the sole positive performance seen on Thursday. While not considered investment grade by the wider investment community, the activity in various cryptocurrencies seemed to also hang in the background of the securities markets. Bitcoin fell over 25% last week and fell over 50% from its all-time high, set back on Wednesday, April 14th. This volatility, typical within the space, took a bit of luster from speculators' eyes. Finally, Treasuries held steady as the 10-year yield closed flat on the week at 163 basis points.